you recommend for young or MSMEs to adopt, to change, or to have financial freedom, based on your experience?
From my experience, I would say that I want to request my young brothers and sisters, we got to declutter ourselves with the virtue of that we can get it easy and get it very fast. And I would want to say that skills are the only thing that is going to ensure that we move forward. So this, it's not possible to get really there quickly. It's possible to ensure that it has to be steps. And I would say the mindset of knowing that we got to walk, it's not a run. And it's possible to achieve and not achieve extremely fast. Then that's the mindset I would want youngsters to adopt.
Have you ever wondered why they say life is a game for the rich and a gamble to some of us, if not all of us? This is Mwakio, the Unfiltered Economist. On this platform, we discuss matters to do with the economic, but importantly, we strip away the politics, the PR, and the podium speeches that are unfiltered. So today we have a guest, and we'll be discussing or looking into dissecting the economy on matters to do with the MSMEs and access to finance. So we are joined here by our guest, a very renowned name in matters to do with the economy, Daktari James Nganga. Daktari is the deputy regional manager for I&M. But Daktari, karibu sana. I will allow you to introduce yourself.
Thank you so much, Alfred, and good evening, good morning. I'm going to be here. As Alfred has started out, I would want to introduce myself. My name's Dr. Nganga. I'm a Deputy General Manager with NM Bank and Regional Manager for Coast Region. My work entails interacting with businesses, interacting with customers, and ensuring that we take the conversations forward. This conversation is about how do we do next for these businesses? How do we ensure that the businesses survive on what we call incubation? We want to go to growth stage. We want to go to optimization or optimum stages and ensure that there is no stagnations. You know, in business curves, you usually say that there will be a stagnation and then there will be a stage where business starts coming down. We try to ensure that a business is incubated, a business is on growth phase and continually moves on growth phase. Of course, with maturities, and there could be slowdown, but we do want to ensure that as a bank, as an institution, that we persistently help our customers grow. That's our conversation on a daily basis. In addition to that, I also have conversation with students, matters economics, and of course, a lot of consulting here and there. I'm happy, Mwakio, you've found this particular opportunity or this particular forum important so that you can have also conversation and help that person who would want to discuss more business and what exactly they would want to do for this particular space that has a lot of potential, untapped, and of course, a lot of failures.
Thank you, Dr. for that wealthy introduction. I will also say Dr. also happened to be my lecturer when I was finalizing or developing or doing my master's of arts in economics. So I understand Mwalimu and Dr. in depth on matters economy. He's the best person to dissect or give us the direct conversation, well unfiltered and detailed. So, Daktari, they say MSMEs build up to the bigger percentage of unemployment. 90% of employment informal come from the MSMEs. In fact, for the record, SKNBS data says that 30 to 40% of the GDP is built up by MSMEs. But the question or the hard truth is, why are they failing within a very short span? Why we do not have our lifeline? Their lifeline happens to be very short-lived. What might be the challenge, Doctor?
Great. MSME sector, as you said, in any country in the world forms the largest composition of all employment, of all engagement. And why it does that, it is usually the fallback or the solution to unemployment. So, and as we continue churning out graduates, and then there is no white-collar jobs, what they have to formalize to is MSME. Unfortunately, the greatest failure that is coming in on MSME is because this fallback is, first of all, not the main thing. That is basically the main thing that is making these particular businesses fail and fail quite early. When I say it is not the main thing is because the entrepreneurs, whether supported by their parents to start these businesses at their young age, or whether supported by government or supported by institutions, they're doing it as a by the way or a side issue. That's one. Number two, when it comes to business, I say business is like a regime. It has got rules, it has got curfews, it has got boundaries, and if you don't align yourself with them, then most likely you'll end up in a business failure.
Interesting.
So that is why we're seeing a lot of failures in it very early, very early stages of SME. Yeah.
Dr. There's been a very interesting conversation since the government that the bill came in place, and the narrative that was peddled, or rather not a narrative, but the manifesto that was put and post prominence, then an umbrella that there has was around what economic model, transformative agenda, it's an iconic data. Politicians, technofab may international development partners have been discussing on matter to do with empowerment, but still you will appreciate that most young people still are hustling. They're still straining themselves. Business is closing down. Why are they still struggling despite this empowerment term?
Good, quite a good conversation and quite a good question to ask why are businesses not succeeding with a lot of focus on it.
Yes.
The biggest problem that we find in this particular area is that it is a time that government policy decision makers and of course even the foreign support that you're getting must move out of boardrooms.
Very good.
The conversation must get out of boardrooms and must come to the consumers. And if we can have these conversations from the consumer perspectives, it means that you're going to really wear the shoe of the consumer of this particular conversation. And when we are the shoe of this particular, the consumer of the particular conversation, then we are going to transform from within. You know, when we keep on having a lot of beautiful manifestos, and of course, a lot of presentation in boardrooms that are having, we under the AC and all that, the person, the hustler who is out there, whether they are on the street, whether they are fishing, whether they are in whichever sector, whether they're in manufacturing, variation, all manner of sectors that our MSMEs are aggregating, is that we may not understand their languages. When you say we are not, this particular lack of understanding their language could be from what exactly is the pain of these particular businesses. We could be discussing the pain is finances, but could be the pain is skills. We'll be discussing the pain is skills, and maybe the pain is finances, and vice versa. Also equipping our people and helping them understand that this is on its own what they should be engaging in on a daily basis. Lack of those conversations, we have got the policy decision makers, our government, the county governments, us as leaders, not working with the sector itself, then it could be one of the biggest things. Number two, as I tried to allude earlier, is that our MSME participants or our MSME players, they need to know that this is not the other thing. It has to be the main thing. It has to be what exactly they need to dream about, that they need to wake up. They need to think about in the evening so that they plan what to do the following day. But if they wake up to it because the other one didn't happen, then it is going to end up being a fatal failure. So basically, there are so many concepts. I believe we shall have a conversation around that. But you're finding that the policies themselves are not aligned to the ground. That is why we are saying that the bottom up remains still a policy, while they're still down those who are supposed to have been transformed by the bottom up policy.
You have a unique way of looking at it. And I have seen, or we have had many funding models that have been proposed. Recently, the national government came up with a program called Nyota that targets the 18 to 29 and mostly the school dropout. Do you feel or believe that is the right approach? And remember, we also have a number of young people who are degree holders, diploma holders. Is the approach really the best approach, where they're focusing on people who have not had an opportunity to be graduates or diploma?
Good. I would say, unfortunately, the approach would not start. Why it will not start, I want to explain, and not really in a negative way, is that if today, Mwakio, as an economist, you have a gap in consumption.
Absolutely.
Like you don't have food in your home. Today, if I give you 20,000 and not set up a business, you will most likely go and consume that money.
Correct.
And you consume it and hoping that by the time it's over, we have gotten something to do. Unfortunately, this particular group of youths, right now, what they have biggest problem with is consumption. And it is demonstrated by their habits, where you're finding them, shyrox, money borrowing, gamings and all that, trying to get the little that they can have, even to even fair for the next thing. So we're having, this money is going to be 90% consumed.
No.
The best approach would have been to try to tool them. And when I say to tool them, I would have said, for example, this is a model that really works well in China, that a certain age group of people, a certain level of education is subjected to certain skills, certain tools. For example, maybe you could have 100 of them trade on modern methods of fishing, 100 of them, 1,000 of them, depending on the counties or societies' opportunities. It is possible to have tooled them using this particular money. And when you see, if today somebody gives you a certain level of skills, Alfred, then that becomes golden. It becomes like it will never be taken from you.
Yes.
So if would have had maybe some 3-4 weeks of trainings on what your teaching them into capacities, equipping them with some very unique skills, then they would come out here and run business. I'll give, for example, what you have in all our towns. You'll find there are so many garages, right? And for example, it is possible for you as a middle class to really struggle with a certain form of repair, and you find you don't have experts. It is possible to find that there is no one, like for example, in your environment, who can really support you in a certain kind of a unique skill, for example, a gearbox, and work on it entirely. You'll find that most of these unique skills may be refrigerations, where you find that you have a failure in refrigeration at the time, which is not working. You find that we don't have people who are able to repair microwaves, and I'm trying to say, we do not have very good skills in so many other things. So I would have preferred the government in this particular model of trying to reach out to these people, because jobs are not available, would have prepared some unique set of skills, and then release these people into the market there, allowing them to pick the businesses that are there from their own skills. If not that, I would have supported the government to pay even private sector to employ these people for some time using the same money. For example, if at all they have 50,000, 100,000, it is possible to allow private sector to pick every small company that is within your environment, for example, or from the county or national government, to pick 50 or 100 and put them into the practical skills. And the government pays them directly, allowing them to do attachment that is paid for by government. By the time these attachments are over, whether they go to run for 6 months or whichever time, then you release these people to society there. What you find is that they're coming out no longer school dropouts. They're coming out people who have really seen what exactly happens inside there, whether it is body shaping, whether it is panel beating, whether it is making manufacturing of pipes, whatever it is that happens within the industries that we have, whether they're good participating in EP3s, where we have got very professional knitting and other things. I'm talking about government tooling our people, but giving them stipend that money is for consumption.
That is Daktari keeping it unfiltered on this conversation. Daktari, just to build up to that conversation, I will also amplify something that the government is doing around what you have mentioned on skills and of course the vocational training. The government has really invested on vocational trainings, and I will speak about the county government. The county government of Mombasa today has come up with a program called RPL, Recognition of Prior Learning, whereby they give or offer a program services to young people or women or people with disability to understand what they have in terms of talent, in terms of experience, and they take you through a certain timeline with a program. Of course, it's being done with the partnership with NITA. A good example, you're a good cook, but unfortunately you didn't get an opportunity to go to a university, college, or you're not certified. So with the partnership the county government has entered with NITA, a government agency, it has allowed most of these young people that they are given a form of certification based on examination that takes place. So this, I believe, is a good approach and is what you're mentioning. But above that, on the issue of funding, back to the issue of funding, I know the governor of Mombasa, His Excellency Abdul Somad Sharif Nasir, has come up with a funding model that is quite interesting, that is called Stawisha Fund. It's yet to be launched. I've seen the documents that are at the Parliament Assembly, County Assembly, sorry, not Parliament, but County Assembly for that matter, for enactment. But basically, what it entails is giving funding to most of the MSMEs or young people to inject the platform where, remember, he did a document on factors, economic factors influencing growth of MSMEs in Kenya, specific study being Mombasa. And one of the key challenges that drove to that conversation was access to finance. So basically, they're trying to inject access to finance to young people. Now that you're in the banking sector, what has been the biggest hurdle with access to financing in discussion around loans? Is it being the issue that young people do not have guarantors? Has it been the high rate of interest? Has it been that most of the young people have not understood the banking model or modalities of how to request for finance from the banks?
Okay, I would approach that question on two facets. I'll approach it from the side of the problem that is from the banks and problem that is from the MSMEs themselves or the consumers. Now, from the side of the banks, the collateralizing every lending is a big problem. And what I mean by this is that where we got to have securities or something at the back of lending, it is a big problem that is going to continue behaving every MSME that you try to lend to. People in the bank that I work for, INM Bank, is that last year we came in as the best bank for MSME on unsecured lending. So what you're trying to say here is that customers who are in the MSME and of course, we have got quite a bit of several sub-segmentations. You're talking about nanos. Nanos, you're talking about people who are on startups. You're talking about MSME, the small one. You're talking about SME. Then you're talking about business banking. And all these levels, we are looking at them having very unique needs. And so as per economist here of the conversation on MSME, I would want to combine with the nanos and say this, that this particular part of looking for securities is really something that bankers like myself and many of us is that we must get over that. And that is what we find in the most developed countries is that the credit studying of a person, which you call character lending, is much more important than securities. And they're saying that this particular young person may not have any security. This particular young business may not have anything to bring to the bank as a fallback or what we call the charge on what exactly they need to borrow. So banks opening up spaces or having a segment within themselves where we are lending to MSME without securities, that is a starting point. And when I say that, then it comes into asking why then are we not moving as fast as we could? This is it. Banks will not give you startup funds in as much as they're not giving you secured funds. They're giving you unsecured funds, but they not give you startup funds. So an entrepreneur must be able to talk about the seed itself, the seed of the business that they need to look into. So, and why this is it is because an entrepreneur who has put the seed capital into one business, they will be able to give it a priority, they'll be able to give it importance, and they're able to wake up every day knowing that there are risks into loss of funds. So this startup part, where bankers will not participate in the conversation, is really a difficult part. And as you are saying that it could be that MSME, that they have lacked that particular part of seed capital. Because, for example, if you need to do a certain form of work, then certain tools are required. These certain tools that are required are not free. They need to be bought. If you need to set up some small enterprises, I'm a kind of person who don't support opening up of shops. I don't support opening up of the next counter or the next selling item. I'm the kind of a person who try to tell MSME sectors is that the best thing you can do for you to succeed is you research on demand that could be in your environment. And as you research on the demand that could be in your environment, then you work towards satisfying the particular demand. And if we work under this MSME sector on demand-driven services or demand-driven supplies, then this particular MSME and nano sectors will, of course, be able to thrive the challenges that you're fighting. So, on coming back on to the matter of financing, is that particular seed capital, how we need to raise it, we could raise it from a lot of collaborations. I mean, banks will be able to support you in case you come in form of what you call joint applications. When you say joint application, you're saying that even if it's startups, groups are doing very, very well. And when you're saying groups, you don't need to be doing the same business. You need to be scattered into many businesses, but you have got what you call group dynamics, where you sit together, get trained together, and you discipline each other, not in war or anything, but trying to ask each other questions that are difficult, that we borrowed and we borrowed together as a group. Are you paying your part? Are you doing your weekly records? Are you putting together what exactly the bankers are telling you to move forward? Let me say this, that on the part of seed, we are addressing it this way, that if the particular MSME are not able to raise this particular starting capital, we are saying that put together these particular participants into a small group, I think as minimum as you can, then whichever seed fundraising that you're able to do, our bank is able to do 5 times. So meaning that when you do 5 times, then we led to the various part of these particular businesses. One could be running repairs, the other one could be running some supplies, the other could be running some teaching, the other could be running whatever it is that you're doing. We said these people, when they come together, they're able to put together, then serve in a way that they understand each other as friends, and then help each other in a way that they're able to follow through the various steps of business the bankers are going to take them through. And on maturity, then you're going to release them to what you call SMEs. And now SMEs are able to start on their own. So that is trying to answer the part of funding where there is no seed capital. Now, where we have seed capital, I mentioned at the beginning that you're lacking discipline in running these particular small businesses. And when you say, like, I usually like telling business entrepreneurs is that when you run your business as an institutions with entry, exit, boundaries, curfews, and all that, all manner of rules, then the business will do extremely well. But when you do this business like something that is not your key, you come late to the business. Of course, you close long hours. You are the person who do not listen to your to your consumers what exactly they're asking for. If you find an item has been asked 2, 3, 4 times, then what it means is that the consumers of your business are demanding that. And that is exactly what you should be talking about. If you're asking a certain kind of a supply, that's what you should be giving yourself a priority on, and not exactly what you think you have better margins or have a better return. So responsing MSMEs and responsive market spaces is always going to ensure that these particular businesses succeed. Now, when it comes to government trying to provide funds, I still find it a very gray area, because whom are you going to give and whom are you going to deny? Because if you call for people to come for funds, you'll have endless applicants and there'll be extremely so many of them. And having not gone through what exactly they are doing, having not having what you call vetting procedures on what business are they doing and they are doing where, then again, you're talking about another business, another venture that is going to really be a failure. So I'm talking about funding for MSMEs needs to be left to what I would call the sector itself, but then the government can provide funds to the sector that is going to be extremely discounted. What I was saying here is, for example, like I would talk about mortgages. Mortgages right now, bankers are able to rate at 9%. Not because they're rating at 9% because mortgages have become cheap. No, because the funding is available now through other partners, but it is being done by the bankers. So now they're offering these funds at a cheap rate. So government should also allow, if they create a certain form of funds, for example, Stabisha and others, it's possible to establish maybe some forms of circles.
Absolutely.
So that then the people who are able to be vetted by these particular players in the sector can vet their businesses, define some rules and regulations, and ensure that this fund becomes a revolving fund. And where now the government now starts in a supervisor or monitoring, and then the private sector or the banking sector is able to ensure that there's proper collections. The backup will ensure that these funds are available for at a cheaper rate. Those are the answers I would want to answer when I talk about matters with funding and how it can be done better to ensure that the cheap funds and our MSMEs or SMEs are able to consume and ensure that their business succeed.
So basically, Dr. You're saying that there's need for the government to work very closely with the bankers so that they can have a seamless way of not only dishing out, but getting these funds getting to the right people with because the bankers have the expertise, they have the human resource. This is what they do day to day. And government, as they say, we are not in business of we are not into business of making profits, but creating an enabling environment.
Agrees you 100%. If you go to developing countries or countries that have developed, you find that what started extremely very strong were government financial institutions. And they were not for government to make money. They were government to ensure that there is financial inclusivity that is not only profit making. Meaning that they're able, for example, today we can have a revamped post bank. And then government, whether it is division, what you call devolved government or national government, providing funds that are cheap and supported by infrastructure that is post-bank, whether you're talking about the technology, mobile systems, payment systems, funding that particular bank which is scattered all over the country, or other government banks, or working in private banks like ourselves where we work, or in fact every county has got local circles that are there. They're able to develop partners that are able to be told, this is exactly what you're providing. This will be your income. They need to even be defined. You're going to charge 5%. We charge 2% because you need only to take 2%. And not 3% ensures there is growth on the fund. So even if that particular government or county government provides some $1 billion or $2 billion, the initial cohort takes maybe 100 of MSMEs. Then what it means is that those MSMEs will run 6 months, 7 months, they are paying. Then you come to the second cohort and then you continue revolving these particular funds. And at the same time, this fund is not diminishing because it is grown from an element of a little bit of charges that are not punitive to business. Averagely, normal business in Kenya maybe would do anything between 10 to 20% of profit. Otherwise, if you take anything beyond that, you'll most likely not have consumers. So the current environment where MSMEs are unable to access funds at 30%, whether from Shyrocks or money lenders and others, says that it is not possible. It's not sustainable. And that is why you're finding that they are borrowing to kill their businesses. They're borrowing just to ensure that they deliver the next item, but it's not even profitable. So that gap requires to be occupied by market participants that are really willing and participatory into exactly what is happening in the market spaces. So somebody who is able to go to Kongwea, sit with the onion sellers, sit with the tomato sellers, sit with the clothes sellers, and I'm not talking about the bulk people, I'm talking about the small retailers, and they'll be able to understand that borrowing 3,000 and paying 300 at the end of the month, that is okay. But
Paying 1,000 from borrowing 3,000 cannot make sense. At the same time, this particular person is a person who have got a lot of pressure points. They don't have really a modern kind of living. They don't have health insurance. They don't have so many other things. So there's a lot of pains that keeps on happening on a daily basis. And those are the conversation that you're saying, that if that particular space is addressed, where we are asking ourselves, what are they consuming, at what price, and is it sustainable? Then we are talking about that it is okay, that you can be able to move forward. Let me say this, that if the government today says that they are going to provide 20 billion
Yes.
to the youths who have applied for 50,000 each,
Yes.
that is money that will vanish. If this money was provided at 500 million shillings for every county, 47 of them,
Yes.
and given to private sector, we would be talking of hundreds of thousands of businesses in the next 3 years that has been able to be multiplied on what you call a cyclical way of growth of business. So rallying with businesses in a way that this money is lent to business and not given for free. So I'm saying that funds are required, but not only funds are required, channels are much more important on how they are going to reach into business.
Very, very interesting conversation, Daktari. My question will be, do you feel there's a deficit in matters to do with the research? Is there a deficit in matters to do with the policy that we have? Or is it the issues to do with the lack of willingness or leadership willingness to dissect the information at large? What am I saying? You have stated that most of the monies that are designed, or the funds that are designed, most of the beneficiaries do not understand how to go about it. Is it the policy deficit, or is it the financial deficit or leadership deficit?
Good. Now, any developing economy or economy that has developed has got very few politicians. And what should happen is that these few politicians are extremely wise, that they know that their work ends at the ballot. After their work ends in the ballot, they stop participating. And they need to bring in expertise to come and help them deliver exactly what really promised. I usually say that a politician needs to behave like a king who is supposed to sit in a beautiful throne and wait for subjects to deliver what exactly was on their mind. A king is not supposed to be waking up every day to go to the field and do so many other things. Otherwise, the power, the euphoria that is in their head will not allow them to do the heavy lifting. I keep saying that the more politicians you have in our country, the more the economy will never move. Because what usually happen is that every decision, every concept, every policy is for the next political decision, the next political seat. So what am I saying here is that the politicians need to establish a very wide network of expertise. And any politician who will do that kind of approach is going to be a very successful politician.
Interesting.
So, because what is going to happen is that there are going to be transformations that are real. And number two, you're going to have people who are working with you that you're not afraid to ask difficult questions. Not only ask difficult questions, to tell them to take a walk.
Yes.
Because you will be having what you call strategic objectives. You're going to have key performance indicators as a politician that you deliver to Mwakio here in an envelope, and you tell him, I am giving you this, and I'm giving you a midterm appraisal.
Yes.
These midterm appraisals that I'm going to do, let you go, or you continue with work. And these are deliverables that you got to deliver. And since Mwakio doesn't have a crowd of supporters around him, whom you'll be afraid as a politician that they'll not vote for you, then he's going to really deliver your numbers. And these numbers are what you're going to present to your constituents, that you're going to present to your citizens of your county, and of course, you're going to ensure that they're going to ensure that you have the next seats. What I'm trying to say is this: politicians need to ensure that around them there are as few politicians as possible. What in Kenya you have is that a grouping of politicians who group the deliverables, and then after the government is elected, then they share up posts. And then that is how all of them will tend to sit on the seats and not go out there and do the heavy lifting. So the conversation on MSME requires people who are answerable to difficult questions. They must be experts. there must be people who are there out there in the field working with these particular people, and people who are really desperate to ensure this work is done. We saw it with Kibaki. We have seen it in some countries, and I believe that it is possible, and especially our county governments, if we can start from the small areas that we have, then it is possible for that particular kind of politicians be lifted up by the resultant of exactly what is happening in their own areas, in a way that they become, of course, pronounced or announced or prominent in the country. And that is even how these politicians who are in local politics will end up having highest seats, by ensuring that the small deliverables are happening in their own areas. So I would say the problem is both leadership, as per your question, and not only is it leadership, I would call it the problem is politics, and what the politicians think is important to run the government that they're having. Yes.
Very interesting response to that, Daktari. Daktari, I know you have a very privileged and a unique position in I&M as the Deputy Regional Manager, a very interesting position regional within the coastal region. And I know I have had most of your speeches and interviews. You have very deep understanding on matters to do with MSMEs. For a very long time, we have had these challenges discussed back and forth, back and forth. Your honest professional, perspective on matters to do with the health of the coastal economy. What am I asking? If you look at the sectors, what do you believe, or which sector do you believe is thriving right now within the coast region? And which of these sectors are silently dying? And where is the money thriving within the sector?
Quite a good question. Now, when you look at cost itself, when my role, as I've said, I'm the regional manager, supporting 6 counties of coast province, the old coast province. And of course, you find that you have presence in all these counties, their branches. Of course, I'm supported by branch managers and their teams. And what ourselves we do, and to try to answer your question, is that the biggest work we do on a daily basis is to identify opportunities. And for example, we are seeing a lot of opportunity in value addition. And we see, when you say value addition, we are saying quite differentiated value addition. You'll find that there could be value addition in agriculture, which of course you are seeing it happening in some areas of coast. You are seeing value addition in manufacturing, and value addition in products. For example, when you say product, means that product that has already been done, and then there's quite a bit of value addition. So what you're saying here is that, and even what you're doing here is value addition. So because we could not be, maybe may not be in main media, but of course you are doing exactly what they do. So this is a form of value addition, and trying to say that we don't need to be on still a big platform or in a big auditorium to be able to communicate this particular conversation. Now, what you're saying is that I'm seeing a lot of opportunities happening in traditional sectors. So what you're saying is that the traditional sector of MSME there before has been shops in brick and mortar, where you find that you would want to set up the next, and then of course we have 50 of them in a certain area, and then none of them sells, and then of course there's a lot of they die natural death. I'm seeing a lot of opportunities on what we call supplies and distribution, MSMEs. So what you're saying is that taking advantage, for example, unique skills, and ensuring that you use those particular unique skills to deliver and to supply. I'm seeing it work a lot, and I'm seeing that you do not even need to stock. So for example, like this week, I had some particular need of lead lights, some repairs in my house. And what I came to notice that I didn't need to go to a certain shop. What you're saying is that there are people who have equipped themselves in a way that they're able to go pick, deliver, and of course supply, and of course get premiums and get paid along the way. We are seeing also, as I said, the opportunities in what you call a services sector that is unique and not brick and mortar. And why this is extreme opportunity is because the margins that you're going to really get within those line doesn't have the traditional sunk and fixed costs. You do not have the cost of stocking, you don't have the cost of rentals, you don't have the cost of other variables that keeps happening on people who have done a lot of established businesses. So I'm looking at MSME and of course telling the young people that if we concentrate and focus in supplies that is not traditionally stocked, then there is a lot of opportunities. And I've seen this in cost. When you talk about value addition on products, here we're saying that there's quite a bit of raw materials that you're finding that are received. For example, received from agriculture producing places. In fact, sometimes imported as raw materials. That particular part of value addition, again, is becoming very, very prominent. So what you might try to say here, for example, there is clothes. For example, we import a lot of clothes. And what you find is that there's a lot of spaces. There's a lot of spaces that we are finding that people taking advantages, not really importing to stock, but importing to deliver some certain prices. For example, look at uniforms. Uniforms for maybe Mwakio here has got workers maybe working in a small restaurant. Then if a young person is able to online order bread, get very quality materials, receive a sample, and then you deliver that particular product as a finished product on a value addition where you have not really done any work as a person. Now, I'm also seeing quite a bit of conversation happening on value chains. When you say value chains, you're saying that, for example, logistics, that is very, very popular in cost. There are so many players in between, and there are opportunities where you're able to put in value addition on the logistics. I'll give an example. That, for example, a truck that is picking a container from Mombasa and is supposed to be delivering in Rwanda, the owner of the truck is focused on that particular cargo that is going to be delivered. But it is also possible for these youngsters of this particular MSME asking themselves, at quota cost, what can this particular truck, what work can I look for this particular truck? Give it along the way. Because it is good to deliver a cargo, come back with an empty container. Is there something else I can do along the way that can really ensure that I have it half cost? Am I able to align this particular other people, other manufacturers along the way and ensure that we work with the particular transporter and ensure that I'm working on this particular value chain and get my margin along the way? So what you're saying here, for example, is that if we participate in the existing businesses and then work hard to research, because there's a huge gap on research, and see what exactly are the other opportunities that can be available along the way. In the established business, it's possible to identify those particular opportunities and of course, put yourself in those particular locations, make our money, and of course, not really having to invest in a lot of brick and mortar or a lot of capital-intensive investments. So you also find that current middle class, including yourself, Mwakio, people have become lazy and they're becoming lazy on a daily basis. And what you find is that they are ready to pay and to pay for so much. And with very, very little effort. So you're saying that, for example, we are seated here. Maybe you could have done a cup of tea. But the point is that it's also possible to go online and click and ask and order. So what you're saying is that these MSMEs, they're able to occupy those particular spaces and ensure that be able to deliver small things. They're able to sell small things. And of course, market ourselves in a way that they are quality, they're efficient. And then what you find, they're middle class in their spaces of wanting a lot of comfort. They consume a lot from ourselves. So I'm saying that opportunities has to be researched. And I have no problem that if at all, especially the government, that they're able to sit these people in some conversations, brainstorming and identifying these particular opportunities. Because they are not really set up like you could come and do box ticking. It has to be brainstorming. What exactly are we having? I've seen governments there before, and especially in some research papers.
Yes.
Where they put experts like you together and of course have representatives, be picked from various, for example, constituencies, various wards, and sit down in a workshop with no agenda. And then you develop your own agenda and then brainstorm on it and come up with a paper that is workable. I'm saying that scenarios like those are able to come out with outputs that are fit for purpose. Unlike where me and you will sit here and define from our own millennials or our own Gen X, and we want it to fit in alphas and of course Gen Zs, and it will not going to work. So we need to ask ourselves, but are we in a participatory conversation that defines opportunities and answers to those opportunities? Because they are unique and they may not be what ourselves we have in our minds.
Thank you. That is very well elaborated, Daktari. I have a very interesting look of the coast region, and it's been a question that most have been asking. And the coast region flaunts itself. In fact, Mombasa, being the heart of the coast region, is the gateway to East and Central of Africa. The region is rich in tourism, ocean, trade, matters to do with the major port that we have, but still, it has the highest level of poverty, and the highest level of unemployment remains so high, above the national average. I believe it's at 43% above the national average. What do you feel, or what is the issues that need to be looked at, both policy, in terms of financing, in terms of leadership? What do you believe needs to be taken in as a key priority to kickstart and ignite this conversation?
Good. I'll answer it on one
word that I want, as any person in government, to ask themselves, are we attractive?
attractiveness to would-be players in business is a key thing, because if we ensure that costs, Mombasa County, is attractive to investors, our MSME will be supportive to those particular investors. When you say whether we are attractive, I'm trying to ask ourselves, what exactly are the supportive infrastructures that we are defining? So, for example, when you say SEZ, when you say economic zones, when you say other things, what exactly are we implementing? What exactly are the features we are bringing around those particular establishments, or they are remaining in shells the last 10 years and they continue another 10 years? Because, of course, a policy came in from a well-thought process, but it didn't move into an implementation where we need to market attractiveness. If today, Mwakio, you're not married, of course, I know you are, and you really would want to attract a beautiful woman, you got to work on yourself. There must be a lot of effort you must put, whether it's on your grooming, whether on hard work. You must be seen you're delivering something on the table. And I'm not a proponent of the person who says I'm the one delivering a table. No, we got to deliver something on the table. And that is exactly answering the question that you're asking, is that attractiveness of the county environment, that it is attractive to investors, is basically what is going to ensure that these MSMEs do well, and our unemployment levels maybe drops from somewhere 40-something to 30-something, and of course maybe the target of maybe below 10% maybe in the next 20, 30 years. But unfortunately, if we continue as we are, of course, the few sectors that are available right now, absorbing a trickle less than 5% of what exactly is turning out from our universities and our colleges, is that we'll most likely in the next 10 years be at 8 or 70% unemployment. So what you're saying is that the absorption from the unemployment space, whether to MSME or workplaces, can only happen if at all we bring in investments, and these investments will come in because of our attractiveness. We are talking about matters to do with taxes, we're talking about to do with infrastructure, facilities, of course, even waiver of taxes for some time, try to work with them in a way. I mean, attractiveness is a key thing.
Attractiveness is a key thing. Dr. Just amplifying on the same discussion, the statistics show that over 60% of MSMEs fail within 2 to 3 years. From the position that you're sitting, I best believe you see this through every day, through the loan books, the business account and closure. What is really killing the small businesses?
do you feel is lack of discipline? Is it lack of skills, lack of entrepreneurship advancement or knowledge, or it's just lack of interest or policy driven towards improving this sector?
Great. Now, I would have wanted to avoid that question, but I would want you to answer it directly. The page Unfiltered is to say business, first of all, will fail if it's wrong business.
Okay.
That's one. Number two, business will fail if at all it was not demand driven. And those are the two key things that have really been killing business. That we have a habit of setting businesses that have not been asked for by demand. So as you set up MSME, then they must have been demanded for by the consumers. And this one involves that we must put ourselves to task to research and ask ourselves, what are the gaps? And that is also part of government to play, because government is also supposed to ensure that they even create demand.
Yes.
So government could be able to ensure that there is the off-taker of what exactly is coming on the left side. If you don't have participants on the left side, then why are we creating on the right side? So what I'm saying is that death of business has been fronted by wrong business and lack of demand, because at the inception, these businesses were not demand driven. So for example, I've seen so many establishment of like clubs and pubs all over coast region. Like you find that they have the biggest population of business in the coast region right now. I would call them two, and I'm not attacking anybody. I'm talking about clubs and pubs and churches. So if these are the most prohibited businesses, then what are you saying? Are you saying that they have been demanded by consumers? We got to ask ourselves whether it's because we are seeing the other one is flashy, then we set up our own, or it's because there's demand for it. So, for example, would you have done something? Would you have used the space where you have a club to set up maybe some two-line of manufacturing? And I guarantee you it would be cheaper to set up that than setting a club. A good modern club will not cost anything up away from a few millions. A setup of a small manufacturing is maybe a few thousand shillings.
Indeed.
It is possible. If, for example, you have to set up some unga, small milling machine or something, it could maybe take you maybe quite a million or two. There is no club you set up with that kind of money. I'm trying to ask myself, for example, Kenya is a country that is shaped in a funny way. Very few people up there and a lot of people at the foot there. So if we want to set up business, we need to ask ourselves, what exactly is the lower cadre asking for? Of course, these people asking for, I'll give example, they're asking for more schools, they're asking for more hospitals, they're asking for more food, okay? They're asking for more things to do in that day-to-day living. Now, if we try to answer those, then you can have so many businesses coming out from basic questions of asking ourselves, what is the biggest population of coast region, and what exactly are they asking for? Then you move to answering that. That will be demand-driven businesses. But if we set up businesses that has been set up by so many other, because everyone is flashy, the other one is popular, we are saying that we are going to have a very short shelf life, because you are going to be popular for some time until the next one is set up, and then as ours dies, even before we do a break even, and then the consumers, because you are chasing the same customers, will move to the next business, and that is why you're finding a lot of business failures. One more thing is that if the entrepreneur believe that the business is okay before it is okay, then what should happen is that the entrepreneur start taking money from business. So before, what you shall say is that a business is like a child. It must consume up to a point where it starts to generate. A child has a long journey. Even if you are how lucky, most likely you'll earn your first shillings in 19 years. I'm not saying that the business need to run to 19 years. Maybe it could be 19 months, could be 9 months, could be 6 months. But it must be allowed to run the journey, ensure that it is able to be stabilized, ensure that you are not taking from this particular business. You are not living like you own a business. You need to live like a pauper to a point where
the business is able to start on itself. This is interesting in that as long as the entrepreneur sees there's money in the bank, they believe the business is making money. You find that also that particular part of note record keeping, where entrepreneurs are able to ask an answer to every sharing that the business is accountability, every sharing that the business is generating. They need to know that this is money for raw materials, this is money for salaries, this is money for rentals. If you split every sharing that you have, you come to find that you barely have money, you barely have made any money. So you continue ensuring that the lifespan of business is taken care of by accountability of every sharing that the business is generating. Because you don't do that, then you ultimately answer to empty coffers, and answer to empty coffers is dead business.
Interesting. So there must be a demand-driven
Yes.
kind of sector or scenario. Entrepreneurs often blame the banks for not being supportive, and the banks blame businesses for being too risky. Now that's from someone who has been in the system, or someone who conveys this messaging and does the managerial positioning of this discussion, where does the real truth lie?
Great. The truth is on both sides of the coin, that banks will see risk because they have experienced it. They have experienced that these particular businesses tend to be from a position of really risky entrepreneurship that they don't end up being successful, and then of course they end up having failure together with the money of the bank, money from the bank. This is interesting in that when you look at how banks will look into risk into business, they ask themselves a lot of questions. That what is the experience of the person running this particular business? Who are the debtors? Who are the creditors? Who are the consumers of the product? The questions are too many. And when you find is that small businesses are not able to answer these particular questions because most of these particular questions have a lot of gaps. So what you find is that I support, which happens from within my bank and any other bank, I support training. And this particular training is not chargeable. This training is free. And bankers in their own way, and of course from our own perspective, we are saying that we will invest in as much as we can, having conversation with business owners, coming to the premises and sitting with the MSME, and not even learning, but of course having a conversation of our training and asking ourselves those difficult questions so that these MSMEs, as they borrow money, because ultimately they borrow money, they do the right decisions and walk the right way. And of course, if we have taken our MSMEs through some form of training, which I've said we can take all the way to 6 months, and they're not charging anyone, is that they immediately are de-risked. We find that they are no longer risky because you have really had the conversation to demystify or eliminate the risk that you could have been whenever these particular businesses. I'm saying that MSME needs to invite bankers like ourselves to their spaces. That even if you are in Kogoea, and the only thing is that you're receiving a truckload of peas in the morning, where are you? You're delivering to Sarava, delivering to other places. Then we do want to have this particular conversation and ask ourselves, how do you do it? What are the procedures? How do you collect? Which you deliver in the morning, you pick your money in the evening. This conversation will allow bankers to have with you. We are going to ensure that you participate in your journey and you're not going to count you as risky as it is as of this particular minute. But approaching the bank as now, and of course, the bank is not able to know whether you are looking for money to consume, whether it is your child who is lacking school fees, or whether you have not paid rentals, or whether it is your business that is asking for this money. So we ask you saying that since there's a very thin line on consumerism, and for personal and consumption by business, then you're saying that the only way to answer this is allowing us to participate in your conversation in the business that you're doing. You're saying that we have got segments with this particular business. We have got officers on the ground who are working with businesses, allow the financial sector, bankers, maybe MFIs to come and have the conversation, and then the journey will be much easier.
Thank you, Daktari. Daktari has kept it very unfiltered. No sugarcoating, no jargons. As we always say, we're keeping it real and raw. Daktari, thank you for elaborating and dissecting the conversation around MSMEs. As we say again, this is Mwakio, the Unfiltered Economist, where we strip away the politics, the polished speeches, the public relationship, and discuss matters as they are on the ground, as you experience them. Welcome back to Mwakio, the Unfiltered Economist. We have this mantra. Have you ever wondered why they say life is a game for the rich and a gamble to some of us, if not all of us? Welcome to Mwakio, the Unfiltered Economist, where this platform strips away the politics and, of course, the issues to do with the polished speeches and public relationship, and dissect the economy. We cut across key thematic areas: economic affairs, youth, women empowerment, public policies, and our day-to-day experience that affects our decent livelihood. Daktari, karibu tena. Let's go to practical. For thousands of young people and small traders that are watching today, this show or this podcast, have an idea on what needs to be done of them, or how do they go about when asking for loan within your bank or many bankers or other banking facilities?
Now, I would say this, that young men and women who do want to venture into business or venture into MSME, it is really difficult to walk into any banking institution and say that I have this particular idea, I need money, and you get funding. So I would answer it this way, that you got to start from, for example, if you entirely are not able to do something called capital raising. Capital raising is where from your own personal family environment, you're able to raise up capital to start exactly what is in your mind. Having done research and having looked at demand and seeing that this is exactly what will really work for me, then you got to form up into groups, because I know groups are able to get startup capital. These particular groups, then you approach financial institutions, approach MFIs, and where you're able to work together for some journeys. When I'm saying this is you're able to go through what you call formative financial training programs. We, for example, ourselves, we should say that groups need to meet once a week, and of course be taken through by financial, our bankers, managers, and of course financial officers. There is some form of stages on how businesses are run, how businesses are conducted, and then of course, then the groups must develop some habits, some procedure, some discipline that is demonstrated by some very little savings on how you're able to do your own, marshal your own little savings here and there. Consistently do so because you're trying to instill on your discipline. Then at the end of the training, then that is when we say conversation of giving you funding comes in. Now, this funding goes to various businesses that could be in your mind, could have been started already, and then of course what you call co-guaranteeing aspects. So, for example, if you're 12 of you, then they got to be in a meeting where they know that Mwakio here has taken 50,000, Mwakio has taken 100,000, and the business that he's running, they know. This is basically what we call group structures, group dynamics, group discipline, because that is the only solution I could tell you where you do not have starting capital. You want to approach institutions for starter capital, and working on your own bankers will most likely be unresponsive, and will most likely tell you to do your own journey, and then you can come at the growth stage.
Thank you, Dr. As we decode these matters to do the MSMEs, today, if you're starting a business in Mombasa or Coast region, what mistake should an MSMEs avoid that is currently happening with most of the MSMEs?
Yeah, so the biggest mistake that MSME need to avoid is copying businesses and not being compliant. So if you are setting up a business, don't copy another business. Do a business that you know best is your business. And as I said, and I'll repeat again, this is a business that is going to answer to a certain business environment. Number two, please do not run a business that is not compliant.
So what we are saying here is that the first thing you need to do is approach the government or the county government and get to know what are the requirements of your business and ensure that you are 100% compliant. There is nothing that is as difficult than having conflict with the administration. So you got to ensure that the taxes that you fall into, whether it's a TOT, whether it is annual licenses, whether it is whatever licenses that you need to do, you got to ensure that you are compliant. And lastly, and of course most important, you must work backwards. You must ask yourself, what will be my need of business at a certain level, and then you work backwards to ensure that your needs for now will add up to your needs at a certain time. So looking at the vision, let me say this, that if you want to set up a business, you got to derive some vision and mission so that you can look into the short term, the medium term, and long term, and then work backwards so that you get to know that I'm starting here because I'm looking myself at a certain level after this particular period of time, and that's another level, that's another period of time. I'm saying this, failure to consult, again, is very detrimental into business. When we say this, you are saying that you're not an expert of everything, nor am I. And I believe the best thing you can do is that ask as much as possible. And then with that, you putting all that together, then you'll be able to most likely have a very business successful journey.
Thank you for that, Dr. Dr. Nganga. I have a very sensitive question that I would like you to dissect for our listeners. The Kenyan economy or the economic system, has it been designed to help the small business grow? Or has it been putting the MSMEs on a life-supporting machine where it injects oxygen to keep it alive? What are those that keeps, why is it, or what is that keeps them permanently struggling?
Kenyan economy and Kenyan policy from all manner of government is extremely unfriendly and hostile to MSMEs. I see so because what we see is that they are MSMEs are seen like quite a bother to establish business, and there is no defined answer to them from a policy decision. You'll find that, for example, Kenya National Chamber of Commerce and Industry, whether they're talking of Kenya National Association of Manufacturers, they're talking about Kenya. There is nowhere you'll find small businesses having a conversation. So as Kenya have their presentations, whether to Ministry of Trade, whether to Ministry of Finance or the county government, the highest offices, and of course developing policies and even political agendas, we are seeing these particular small businesses are out. They are only seen as voters. As I'm saying that the political environment, the economic environment, the policy environment is not as MSMEs and SMEs and nano businesses, Frederick.
Thank you. If today, Dr. James Nganga, you are given the opportunity or power to redesign the MSME's financing model and support Kenya at large above coastal region, what are the 3 things that you will change immediately?
First of all, I would provide funding, and I said I would provide those fundings through the structured organizations, and ensure that this funding is monitored, vetted, and managed on a day-to-day basis with a lot of trainings and a lot of discipline. Number 2, I would ensure that I have attractive infrastructure. We were talking about availability of electricity, availability of water, sewage systems, roads. I'd ensure all that. And lastly, I would ensure that I devolve from expensive areas of running business concentrations. So what you're saying, for example, the coastal counties have got a lot of constituencies. I think there are 6 counties, the 6 constituencies. It's possible to identify what exactly is strong in those particular constituencies and ensure that we work unique attractiveness in those particular constituencies. Nyali could be very good in hospitality. Airbnbs may be doing very well there. Ubers may be doing very well there, and other manner of, I would call middle class and above
areas of concentration. MSME could be able to support that. Are we able to allow those particular businesses to thrive there? And then when you go to the side of Kisauni, whether we are going to go to Mvita, can we look into what exactly could we empower as attractiveness? There are areas, for example, where we have got EPZs. What would work for them there exactly could not be the best that works for the other constituencies. I'm looking at what you call analysis that is specific with unique deliverables. I don't want to complicate it. I'm saying that sitting down and looking into the various specific that work for certain areas and ensuring that we work through those particular environment that they become attractive. So constituencies or counties, like for example, if we are talking about as you move towards Mtwapa, you could support agriculture. You could support small scale chicken farming, models, model pools and all that, and ensure that those people who have got small homes that have got compounds, they can start getting us fish. They can start bringing us, ensuring that we don't need to import eggs. We can have milk that is fresh. I'm trying to say that I would want models that are specifically attractive to unique circumstances that we have, so that you can ensure that the whole county is able to really flourish, including other counties in coast, in a way that that is able to go. But lastly is that there is one that fits all areas. That if we can be able to be attractive to investors, then our MSMEs will become supportive infrastructure. So we can look at the overview of way to do business. If we can mention other countries like Rwanda and all that, we say that they had to really sit down and ask themselves difficult questions. What would make us attractive? What would make up some small Chinese companies set up here? And as they set up here, then they're going to consume some supplies, and these supplies are going to be done by MSMEs. What are you going to ensure that Mwakio here can set up a small, company for making furnitures? Because of ABCDFGH of attractiveness, there is this benefit that the county is offering. There could even be waiver of licenses to ensure that this particular business set up here for the first maybe 2-3 years. And as they set up, then of course, there could be requirement. You must employ a certain number of workers, and these particular workers that has to be employed by this particular company in the small way, then they are all absorbed from here. And of course, as I've said, MSME will be able to deliver supplies and consumption in these particular companies. I'm trying to say this is exactly, it's not tailor-made, but I would request a lot of research to be done to ensure that we give solutions that are really able to work.
Thank you, Dr. Because of time, we'll allow you to be very fast on some few quick questions, maybe, so as we wrap up the conversation. County government have received billions of money when we speak about devolution since its inception. And county government were brought forth to decentralize opportunities. On your honest assessment, do you believe there's much still needs to be done? Or do you believe there's much that has been done, but there's an issue of policy that needs to be driven?
A quick answer is that we seem like we've not yet felt devolution. It's almost 15 years now. Because it seems like devolution didn't bring services, it only created some jobs in the counties and some governments. So I would say that we need to go back to the board, ask ourselves, is it that we have the counties have to be relooked as they are, or it is really policy that need to be looked?
Yes.
I would say that some of our counties that they are, I am the kind of person who do not say that the counties are so many, because you find some of the counties are the same size with some countries,
yes,
that are doing very well. I know of a county here that is bigger than Rwanda in Kenya. So we cannot say that our counties are many. I would say that the models of exactly the policies and the implementation is a problem.
There's a problem. And that needs to change.
That needs to change.
Yeah. Despite all this discussion, what are the challenges and opportunities that still exist within the coast region? Quick ones.
Opportunities in coast region,
The economy.
there's a lot of first of all, Mombasa County has a lot of space and has unique advantage being near the ocean. meaning that the opportunities that are here is that we have got unique attractiveness. I was sitting the other day with a certain investor who have visited some of our neighboring countries and ended up setting up here because of the unique advantages. Those unique advantages are able to be taken advantage of.
Okay.
But you need to announce them. We need to market them out there. Those opportunities are like the blue economy is an advantage. We've got a huge manpower, extremely huge manpower of schooled workers. We have got another advantage of very young population. That's also an advantage that you can take advantage of. Then lastly is that we have got things like stability in power. We got the government has done quite well in trying to ensure that infrastructure is coming on. Of course, it's got a bit of work to be done. Those are supportive functions. Challenges, we don't have policies that can ensure that these particular things end up being beneficial to the ultimate goal of these particular county governments.
Thank you for that. Daktari, you've spent 23 years in management, operations, and marketing compliance. What is the single most powerful economic lesson that you've learned over the 23 years?
I've learned that everything that, especially business from an economic perspective, it must be a journey. You don't accept business as a journey, then you'll be frustrated and it will, of course, not deliver its goal as a business. Generally, we are saying that it must have milestones, and those milestones must be firm, deliberate, objective, and must be celebrated. So economic journeys of businesses I've learned are most important to ensure that we've got those levels that we're able to establish from MSME to conglomerate, and can only be in case you have got those milestones. I've seen them happen to businesses that we have worked with as a bank. And I start every other day say that I know that business because we started with it and why it is. I know that other one. I would want to have many of them. Yeah.
Thank you. What mindset would you recommend for young or MSMEs to adopt to change or to have financial freedom based on your experience?
From my experience, I would say that I want to request my young brothers and sisters, we got to declutter ourselves with the virtue of that you can get it easy and get it very fast. And I would want to say that skills are the only thing that is going to ensure that we move forward. So this, it's not possible to get really there quickly. It's possible to ensure that it has to be steps. And I would say the mindset of knowing that we got to walk, it's not a run. And it's possible to achieve and not achieve extremely fast. Then that's the mindset I would want youngsters to adopt.
Thank you for that, Daktari. I have final questions, very quick ones, that I will want you to answer with one word, short answer. Very simple. Saving or investing?
Investments.
Investment. Job or business?
Business.
Risk or security?
Risk.
Risk. Costs or Nairobi for opportunity?
Cost.
Costs. One word that defines Kenya's economy today?
I see you.
I see you. Thank you. Thank you, Daktari, for creating time and coming to this show, Mwakio, the Unfiltered Economist. Until then, we appreciate the conversation, and let's keep the conversation alive. This is Mwakio, the Unfiltered Economist. As we have said, we have kept it unfiltered. Daktari has shared and dissected the economy and closely on matters to do with the MSMEs.